Good morning everyone, this is Amit Pabari, founder and managing director of CR Forex. Yesterday night, two important data came. One was US inflation and one was US core inflation. The good news was that both inflation and core inflation is coming down. If you see the chart, from last 6 months, after making a high of 9.1% in USA, the inflation has started falling down, and yesterday it came much lower than the expectation also. It came to 7.1. That is a good news. Now, if the inflation is falling, what Fed can do in the coming monetary policy, which is tonight, let us understand that. Expectation of the Fed meeting, I will divide in three parts. First, what is the expectation from rate hike? I think there is 99% probability that they are going to increase the interest rate by 50 basis points in today's meeting. Now, the second important point is what are they going to project for 2023 in the dot plot, and what do they say about the market and the interest rate and the inflation for 2023. There can be three scenarios for the same. First scenario is that they remain hawkish and says that in the coming year, which is 2023, they are going to increase the interest rate at faster pace. If that happens, then DXY is going to move higher towards 105 to 106 kind of a level. USD INR pair can move towards 83 to 83.20 kind of a level. What is the probability of this event happening? The probability of this event happening is 10%. Case scenario number 2, they say was neutral stance maintain करते हैं, diplomatically, politically answer कहते हैं कि we will see the data dependency and then we will take a call. If that happens, market remains flat, rupee remains flat. Probability of this happening is 50%. Third, which they says was, I think inflation we are able to control, and in the next year we are not going to increase interest rate at a faster pace. If that happens, then dollar index will get much more lower towards 102 kind of a level. Rupee can move towards 81, 80 to 82 kind of a level, and probability of this event happening is close to 40%. Now let us discuss outlook for rupee. Based on Fed outcome, we may see a gap up or gap down momentum in rupee. But the important question is where it is going to move eventually. We think that eventually it is going to move towards 81 and 81.50 level in coming days. Now let us understand why. We think that dollar index is going to remain in pressure because of lowering inflation in US. Second, crude oil price are under pressure. Third, Chinese currency and Japanese currency are getting strengthened, and FIIs are continuously putting money in Indian equity market. Because of all of this reason, eventually the pair is going to move towards 81.50 and 81 in coming days. So any level above 80 to 50 should be used by an exporter to increase their hedge ratio. Now let us discuss strategy for exporter and importer. For thin margin exporters, we are advising them to continuously to hedge on a back-to-back basis. If anyone wants to wait, they can keep a stop loss of 80 to 10. Thick margin exporter, they should use this opportunity to increase their hedge ratio. And for importers, they should not press the panic button. They should wait for lower levels of 81.50 and 81. With this, I will end my today's presentation. Jai Hind, Namaskar, फिर मिलेंगे. Thank you.